Hi, welcome to the Market Alert for Wednesday, the 12th of January 2022. So Bitcoin bonds, big tech and bullion bid on Powell's Goldilocks testimony. Not too hot, not too cold, just the right temperature mix of virtue signaling and monetary policy promises. Well, yeah, we've had that for I don't know how long, and Powell's former colleagues with exactly the same as well. Well, today's the big one. It's CPI today, and let's see what happens at 1:30. The market might be a bit volatile for the first hour, but it's likely to go quiet waiting for the CPI numbers there. So have a look at yesterday. It was a bit wild in the Dow, that's for sure, as the market was moving down, and then it shot up and then finished on the highs. As you can see, the market finding support at a 50% retracement from here down to here, and then moving back up, as you can see there, and currently trading above the 5-bar moving average in the daily chart. In the 30-minute chart, well, you can see what happened right off from the morning. There was weakness, and then when the Dow kicked off, it just fell out of bed, dropping down. Let's just have a quick look, 100, 200, 250 points before finding support. You can see the D there. We've got demand coming in. We've got divergence in the stochastic, and you can see that we're oversold as well. And I've been asked a question about the stochastics that I use. These are just straight out of MT4. It's the oscillator as opposed to the standard stochastic. I prefer this one. I've got the settings over here so that you can see. There they are. We've got the K, the D. It's 5, 3, 5, and I'm using the close on close divided by close, and then you've got 80 and 25, which tie in with these two here, and it's a lot faster than what the standard is, which I think is 14. I just prefer it. As you can see, I can get inside of the activity of what the market's actually doing, and I'll also use the 50% line as well as a way of re-entering if all the averages are on the long side. But it's stuff that I'm recording at the moment, but that's why I use the stochastic like this, because it gives me a really good idea. Again, you can see exactly the same thing here. If you wanted a swing trade in the 30-minute chart or an overnight trade, that's the way to do it. Again, got divergence here after we're overbought. Get the retracement at the DP, at the 50 MA and the 20 MA, and then we start switching to red. It's again the same picture as we saw before. You can do this all day long, and you just go looking for extremes in the stochastics to actually find the trades. Again, divergence, oversold. This time we've got a supply crossover of stochastics, turn red, and then R1 high, previous day's high, market comes down, takes out the DP level. All started by looking at the momentum in the markets and then taking a view with everything else that is around it. So yeah, just coming back to yesterday, we then saw the market rally all the way back, green all the way, and then we became oversold. Bit of divergence overnight and at the moment as well. So you can see that here, crossover on the stochastics as well. Could do with this pulling back before we get any sort of move to the upside. If not, then the market is quite strong. But we'll see. It's CPI numbers today. That's what the market's waiting for. In the German DAX, similar picture. Yesterday, the market bouncing off the 38% retracement and moving to the upside. I wasn't able to record any trades yesterday because my internet went off during the morning session, which is really irritating. Then I recorded the afternoon and the file was corrupt. So not to worry, there's always plenty more to capture and to trade as well. But a bit of a frustrating day because I was watching the market come back to this 38% retracement in the 5-minute chart, which I'll just go across and show you. And it was really sideways to begin with. I didn't think it was going to do a lot. Then I calculated out what it was doing down to the 50 MA, EMA and the 20-bar moving average. Weren't quite oversold, but I knew we had some resistance to move to the upside without a shakeout. We got the shakeout, and then eventually the market moving to the upside. We got the oversold and overbought and crossover, and then you work out your retracement. We're already red, and then the rest you can see the pattern throughout the day. This is the afternoon session as well. We were already oversold. The market came up, and then some more news. Again, you've got the classic back to the 200 MA BRN, and you've got your demand there. Close back green, and off we go to the upside. And 30-minute for yesterday, a similar picture. Again, you can see this is a much bigger pattern, but continuing in the same vein. Again, over sold at this area, overbought in this area, crossover, etc. So you can see this repeatable pattern all the time in the market's movement. Doesn't matter what market is as well, it has this same repeatable pattern. In the older system, this is the 2-minute chart yesterday. These actually were just scalp trades as the market was quite volatile and pulling back, and that's another reason why I'm shifting up a bit at the moment, because of the increased volatility. To get more out of the trade, you'll see it's a lot smoother in the 5-minute chart, so take some of that noise out. Once we've got through that sideways a bit, you can see how much more smoother. So you can still use the 2-minute chart to actually time the trade, and that was quite nice actually, because again you can see you've got this bigger picture here, back to the 200 MA oversold, and then the market moving higher. So instead of getting taken out of the trade when the market closes back below the 5 bar, you could hang in there by using what's happening in the 5-minute, because once it turns green, it stays above the 5 bar moving average. This is what I call the Russian doll approach, as you start with a bigger doll and then have a look inside the smaller doll just to see what's going on. Again, something that I will be doing a lot more of, and showing you how to reduce the risk by looking at a smaller time frame once you've established the background picture. So where were we up to? 2-minute chart. Yeah, so these were again just scalp trades. The afternoon, again we got a few trades here. They're not giving a lot because the volatility, the market coming back, as you'll see there, as soon as we come back, we're sort of stopped out, and it's the same for all of these trades, because there was no trend, it was just choppy. So the best you could get is a scalp, or 5 or 6 points, which is, if you're into scalping, that's fine, but the volatility at the moment is lending itself to longer term trades, and also because of the new techniques and patterns that I've found and been working on, you can actually stay in the trade a lot longer, and trade all day as well. In fact, that's another thing, you don't have to leave the screen. You just start looking for an oversold or overbought condition, and then take a view, even on this one overnight. So exactly the same there. Okay, quick look at the metals before I finish. We start off with silver. I'm amazed that they're allowing the market to move to the upside at the moment, but they are quite incredible. Overnight price is sitting at the 62%, but I'm under no illusion it's the CPI numbers, and if they come out lower, silver's going to get hammered. If they come out higher, it's going to move higher. Simple as that. 30-minute yesterday, we've got the classic London fix down to the previous day's high, divergence, demand coming in, you see them buying back in, and then they move the market back to the upside, and they've just had a move up to yesterday's high, which has failed, and the market needs to pull back. In gold, also having a bit of a breather yesterday, from yesterday's activity there, trading up to 89%, and we've got a bit of real-time resistance at the previous day's high, and the dollar lower yesterday, trading down to the 50 EMA, and also support over here, which you can see real-time support there. Like I say, the market's waiting for the CPI numbers, which will be out at 1:30 today. Okay, that's it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.